What are the best SIC codes? And how do you choose low-risk NAICS codes to get approved for funding? I want to help you avoid those automatic denials, so let's get into it. So why is this important? If you don't know already, banks are going to judge you. They're going to judge your business based on information that they can see before they're able to actually get into the nitty-gritty of your business credit application. So if you don't have your business set up in the best way, you might already be getting set off on the wrong foot. There's a lot of descriptions that you could pick for your business, but there's not a lot of guidance on that topic. So how do you find the best codes? Well, for starters, most people would recommend 8741, which is management services. Now, I like this because it does give a lot of wiggle room, and being in business management services is actually a neutral industry. What I mean by that is that it doesn't raise any red flags for banks. But what if you don't want to use the most obvious one? Here are 3 methods that we use. First up, look at the industries that get the most funding. So basically, we're reverse engineering this process. You could use Google, blog posts, or even AI to help you figure out this information. Now, you could get really detailed here and really go down the rabbit hole. For example, when I searched this on Google, I came up with a lot of ideas. And a simple query inside of ChatGPT opens the conversation significantly. For example, I asked which NAICS codes borrow the most money. It states that businesses that fall into this category have strong revenue potential, but they need financing to scale. Now, the first one here says real estate. Let's talk about that for a moment, because a lot of times real estate can be looked at as a speculative industry. And what that means is that banks have a hard time lending to certain real estate businesses. So we break it down into good and bad. Now, on the bad side, we have the F word, flipping. If you're flipping properties, it's going to be harder to get approved for funding than if you are in a different category. So if it applies to you, let's bring it over to the good side. For example, asset management, property management, and even construction management. The short reason is that if you're doing asset management, it's assumed that you have business coming in every single month. Whereas if you're flipping a property, you may have to wait 6 months or more before you get paid on that deal. And at the very beginning, when you're using the financing, you don't have your end buyer in place yet. Now, let's talk about some high-risk industries that you really need to avoid. First up, we have adult entertainment and gambling. Next, we have crypto, sorry crypto bros, followed by firearms and weapons, cannabis and CBD, MLMs, and adult services. Some of those are quite interesting, but the idea is that you want to be in a lower risk category. All right, the second method that we use is we actually talk with banks. Yeah, believe it or not, you don't have to hide from banks. It's actually helpful if you open dialogue with them. Visit with them and try to meet with the vice president of business lending, or at least get them on the phone. A lot of the local community banks and credit unions that lend their own money, which by the way are a lot easier to get funding from, are what I call backyard banks. Now with these banks, they have a point of contact at the branch that is in charge of small business lending. Generally, this is someone that's regional. That means that they're on the road a lot, they're meeting with small business owners, and they'll be happy to meet with you for a cup of coffee. One of the best things that you could do is network with this person. You can meet them at events, give them a call, and you could be forthcoming with them. Share with them that you're starting a new business. Or perhaps you're starting a second business. You know that you're going to need funding for your business, and you're in the brainstorming stage. After you build rapport with this person, you can ask them which industries do they see getting the most types of funding, and which industries would they suggest you stay clear of. As a small business owner and real estate investor, I go to a lot of monthly networking events. And guess who's there? The exact point of contact that I'm telling you to go meet with. It's not hard to shake hands and strike up a conversation at these networking events. So that's a quick tip on how you can befriend them. All right, the third method that we use is having a conversation with our accountant or CPA. If you don't have one, again, you could seek one out and actually ask this question as you're interviewing them to work with you. They see a lot more information than we see because they work with a lot of small business owners. Your accountant can be an incredible source to guide you in the right direction when picking an SIC code, business industry, or an NAICS code. Now, I'd like to share with you the top codes that you can use right away. But before we get into that, you're going to need to know the steps to boost up your business credit score in such a way that banks are willing to approve you. You can follow along with my free guide, link in the description. And here are the steps to set up your company properly, boost up your business credit scores, and then apply for funding. When you're creating your company, create the company with a neutral name. So for example, instead of JT Real Estate, you could call your company JT Management. So the parent company could be a management company with a much more neutral name. And then it can own different subsidiaries. This could be done through a trademark or even a DBA, which is a doing business as. I like to use the example of SC Johnson. SC Johnson is the parent company of Windex. Do you see how you could have a neutral entity that owns different brands? Making that one adjustment could be the difference between getting approved and getting denied. So how do you boost up your business credit score? Your business credit score is made up of 3 business credit bureaus. You have Dun & Bradstreet, Experian Small Business, and Equifax Small Business. Those are the main 3 bureaus that the banks are going to check. So what you want to do before you apply for business credit is boost up those business credit scores. You can do this using net 30 vendors like Quill, Staples, Home Depot, Uline, or even gas companies like BP Gas or Valero Gas. The idea is that you buy something on credit short term, and then you have 30 days to pay that bill. When you do business with these net 30 vendors and you pay the bill on time, they report to your business credit score and they boost up your score. You can also use paid services like Nav or eCredible. They're very good at boosting up your business credit score as well. When you apply for funding, I like to start with local community banks and credit unions. The smaller the bank, the easier they are to have an open dialogue with. Big national banks try to fit you inside of their box. And if you don't fit, you're not getting funding. But with a backyard bank, you can actually have a dialogue with the vice president of business lending about what your needs are. And they can help you present your best foot forward, which will greatly increase your odds of getting approved. If you're finding this helpful so far, like and subscribe. All right, now let's get to some more industries and codes that you can use. In real estate, we have 531190. In online retail or e-commerce, we have this code. And in consulting, we have 541611. Those are my top NAICS codes. Here's the SIC codes. Broken down again for real estate, online retail, and general business consulting. In my deep dive, I came up with these industries that get the most funding. Go with what makes sense for you and go get the business credit that you deserve.